Welcome to the Jay Martin Show. Now, as many of you know, I actively invest in the mining business. And today, what I wanted to do was have a look at a newer investment opportunity in the gold sector. This company is called Nexgold Mining. And I have had them on the show before in the studio a couple of months ago. They caught my attention initially because the seed investor, like the lead investor in this deal, was Frank Giustra, a legendary mining entrepreneur and investor. Whenever Frank writes a big check, I'm always paying attention to where that check is going. And in this case, it was going to Nexgold. Now, Nexgold's vision right from the jump when they first launched was to become Canada's next mid-tier gold producer. Now, they just completed an acquisition about a week and a half ago that cements them on this path. And so today, I wanted to dive into the details of this transaction and how it materially changes the company. So I'll be joined by the president, Morgan Lekstrom of Nexgold Mining. Here he is. Enjoy.
This is Jay Martin.
Morgan, it's great to see you again.
It is great to see you again as well.
So I'm really excited you can make the time to get back on the show because I had you in the studio about a month and a half ago, and you were walking me and my audience through Nexgold, your business. Now, you know, Nexgold is a product of the Fiore Group, run by legendary mining entrepreneur and investor Frank Giustra. I try to stay on top of everything that comes out of the Fiore office. And so when I heard about the Nexgold deal, I wanted to get in touch with you real quick. One thing that struck me, you know, we walked through the opportunity, the Goldboro project in Northern Ontario, but what you said in studio was, look, our vision is much bigger than this, and just wait because we've got our eyes everywhere. We're looking for something, right? And I think you said you're looking for something typically that could be a near-term producer over 100,000 ounces, I think beneath around a $400 million capex. Bit of criteria you had, but you were looking aggressively. And hasn't been that long since I had you in the studio and you guys put out some material news about a transaction. So let's start with that. So walk me through, if anyone's just tuning in for the first time, I'll put part one beneath this episode for you. Please watch it. But Morgan, give us the quick elevator pitch on Nexgold, and then let's get into this transaction with Signal.
Absolutely. So our original project was something called Goliath in northwestern Ontario. And that's a 3 million ounce gold project that has 2.1 million in the M&I category. What that means is that is in the high confidence categories. That means that someone spent an arm and a leg of money over all the years to get it to this stage. It's got a federal permit in place. We're just finishing the provincial permitting stages. We're close to construction decision early next year, feasibility studies. There's a lot of news flow coming out of this. And yeah, Jay, you're right. Like we said, we want to aggressively grow this company. We want to put together a pipeline of buildable, financeable, bite-sized chunk assets with a path to 2 and 3 and 400,000 plus ounces per year. And Goliath in itself will produce over 100,000 ounces a year. So we said, well, what's next? And that's where Signal came along, the Goldboro project in Nova Scotia. Kevin did an amazing job with that project. It's got 3 million ounces of gold, 2.5 in the M&I category. And it needed that extra oomph. It needed to be not in a single asset company because, you know, as Frank always says, single asset companies that are going through exploration into development often don't work well. So now we're a dual asset company. We have 6 million ounces on the books, 4.7 in the high confidence categories. And both projects are showing massive expansion potential. So you have something here now that we created. We bought another resource for $8 US an ounce, actually under $8 US an ounce. We restructured the debt, and we can get into all of that. But what is key for shareholders and for people watching is we did what we said we're going to do. We said we're going to form a gold company. Boom. We said we're going to go out and we're going to buy new projects that are high confidence, near-term permitted, which Goldboro is. We've done that. We formed a management team that can build mines. And I love saying this, you know, I'm not going to sit here and arm wave and go, well, we got the greatest team in the world from everywhere and everywhere. Of course, I believe that, but we've got the team that can get it done, and we're proving that.
Yeah, well, 100%. And proofs in the press releases where it matters. And yeah, forgive me, when I introduced Nexgold, I talked about the Goldboro project. It was Goliath is actually, obviously, Nexgold's original project, which we covered in our previous interview. Goldboro is the Signal asset that you just acquired. So this puts you on track to be, one of the next mid-tier gold producers in Canada. I want to get into the details of the transaction, Morgan. You talked about the debt restructuring. You mentioned $8 per ounce. Walk my audience through the details of the transaction, please.
So I'm going to really high level it because it's a bit complex in the nature of, when you restructure debt and all that kind of stuff. So we're paying approximately $25 million Canadian for the company. Very small. At the time of the transaction, there's almost no premium, very small. And Signal has about 21 million US of debt, which is crippling debt, right? Nexgold has a $6 million convertible with our largest shareholder, Extract Capital. So that's been there for 10 years. So we saw this as an opportunity. You combine the two into a $27 million debt, and then we cut it way down. So we cut it down to a total of 12 million US. We extended the term to 30 months. And that's a key point. You gotta think about that. We will be looking at project financing for either one of these assets within the next 9 months. So we gave ourselves a time horizon of like 4 times to get it done. We gave our shareholders a massive buffer, our debt holders a massive buffer. So they took it from 27 million in 2 facilities total to 1 facility at 12 million, $4 million US in shares with a 1-year lockup or a ROFR on it. So we have the right to place those shares at any time. We also have given them a 0.6% NSR on Goldboro. And another key driver for value, Goldboro has no royalties on it. So now when they get a 0.6%, we get 100% buyback on that. That's worth exceptionally more money than that when you do the calculation. So there is a non-dilutive financing method for us. $30 to $50 million. I'm just putting ranges in there. Don't quote me on those. But, depending on valuations, you have a significant chunk of change you can get out of that. So you put the two companies together, you sit here with 108 million shares out total, with 6 million ounces on the books. Actually, if you include Niblack, almost 7. Tight share structure, large shareholders. And you have, by the time this is done, we announced a raise for 11.5 million. Stay tuned in the next few days. That's I like to say I would never announce a raise that isn't full. So as you can imagine with the Fiore Group, where those go, and 2/3 of that raise is taken up by our major shareholders. So we have a significant amount of money already in the company. We'll have more. We'll end up with 25 million in the company. But a very key component to this, Jay, that a lot of people missed in the press release, and when I say it, they go, management and board are putting in $1 million. The management and the board alone, I'm cutting near $250,000 check into this. This is me all in. This is going to put, I'm going to have almost a $600,000 or $700,000 position. And at that point, this is a huge chunk of my net worth. So there is no option here.
That's what every shareholder wants to hear, Morgan, is that you're drowning with skin in the game. And you only get rich if we get rich, which is the formula. So, at a high level, what this transaction does is massively de-risk Nexgold from a single asset to now a multiple asset company, and gives shareholders the comfort of some optionality, because it's a tough business that we're in, and things sometimes go to plan, but most of the times don't. And that's why optionality is super key. Now you've got projects in Northern Ontario and in Nova Scotia. And you've de-risked the debt liability from Signal. So effectively paid down just over half of that debt, and then extended the term on the remainder to 30 months, which allows you to finance inside of that duration with ease. Did I capture that part correct? Is that more or less the activity?
Yeah, no, that's absolutely correct. What I like to say here is when you look at debt structures, ideally in junior companies, debt's not a great thing, right? But when you have a partner like Nabari who's taking all this debt on for us and working with us on this, they understand that we will be financing the build on this. We will be building real mines in the very, very near future. So the ability to repay that is significant. We have an NSR that we can sell on Goldboro. That could be used for automatic debt repayment. So we have multiple avenues and multiple strings to pull that are non-equity to repay that debt in the very near future. So think of that as an intermediary step. we restructured it. We've got that royalty. We close. There's things that can happen from project financing to selling royalties to offtakes, all that kind of stuff that can happen near term because both projects will be ideally permitted around the same time, if not Goldboro being slightly ahead of Goliath, which means we're going to have the luxury, and I mean this, the luxury of choosing which one we build first. Almost no company has a pipeline out there that can choose which one they build first. It's a pretty neat position to be in.
Yeah. And no doubt, Nabari looked at, your financing partners. There's a lot of confidence in that. It's good for a lender to know Nabari being the holder of this remaining $12 million in debt that's now extended for 30 months. So let's run through the Goldboro asset a little bit for me. You mentioned 2.5 million ounces of measured and indicated, correct? Did I hear that correctly? And let's walk through that asset a little bit.
So in the 2.5 range, it's 2.5 million, almost 2.6 in the M&I. The average grade of that is about 3.72 grams. And when you think about it, it's a nice split between underground and surface. I believe the surface grade was 2.25 in the reserve and about 2.65 in the M&I. Okay. That's open pit. Okay. They've already drilled extensions to that and have had hits of 3.8 meters of 74 grams in the open pit shell area. So this isn't a deep underground that you're hitting. You're going, wow, those are high grades. This is like, we're going to take that out. So it's lots of high grade gold in there. There's lots of extension. So you have that. You have the underground underneath the west pit. That continues into the east pit. They've hit one side of it already. We've done no infill drilling. That's another focus. We're going to infill drill on the east pit as well. We believe we can not only change the size of the mine over time, but we can actually add in the west pit. I mean, the drilling extensions there have shown a huge extension to that pit. Again, we're getting an asset that has already got 2.5 million in the M&I that's shown expandability and continues to hit high grades. Like, this is truly a very unique asset. We think it's way bigger than what it is. So, build it first and expand it, build it second while expanding it. Either way, you get a dual news flow path here of permits, First Nations, buildable, as well as expansion and drilling and underground and surface. So you have a really nice split there.
Okay, so Morgan, I'm curious about what's next at Goldboro. So the 2.5 million ounces of measured and indicated right now is in the west pit part of the project, an area that you also say is not fully explored. There's more to do there, more work to do to expand that asset. You can go deeper. What you found thus far, what they found thus far is fairly near surface. And then you've also got the east pit side of this asset, which is very unexplored. Is that correct? So what's the scale of this that we're looking at, and what's next in terms of work?
So I would classify it as probably 2/3 or 3/4 west pit and 1/4 to 1/3 in the east pit currently. The east pit will have some more definitive drilling into it as it's further out in the mining cycle. So, that's something that comes in years later. But the west pit in itself has already shown this huge expansion. If you look at the drilling that Kevin and the team did at Signal, and they haven't been able to convert it into resource yet, it's going to show really well, like really, really well. And then underneath that whole structure, and I'm not a geologist, so I'm not going to sit here and peel an onion for you. All I'm going to say is there's a glob of ore body, that is the pits, and then under it is the underground, and it keeps going. And it goes across to the east pit over here, and again, hasn't been touched with the drill bit. So you have, I think, what is a large district play here. Drilling's very inexpensive. It's $200 a meter Canadian, and it's got infrastructure. You've got roads, you've got a town nearby, you've got power, you've got all the right things to make a mining project. So you're going to see a lot of drilling coming out of that in the very near future when we close, like a very large program. I'll let Kevin and the team highlight the program, but it's going to add a lot to this story. A lot. I mean, not only going to see that, you're going to see permits. You're going to see First Nation agreements. You're going to see a lot of the things that are required to get everyone excited about, eventually building a mine, but also expanding it.
Yeah. Okay. Okay. So that's clear to me. So once this is fully closed, what we should expect to see is a large drilling program led by the Signal team. And so you're keeping some of the human resources. Walk me through that a little bit. What's the expertise that you're gaining from Signal?
So, well, most of their team actually. I mean, you have a team that has gone through the permitting phase, built First Nations relations, has extensive on the ground exploration. Plus, with Kevin, you have a member of the B2 board. You have someone that's built mines, built companies, was involved with Kirkland Lake at starting that, was involved with he's built some really big companies. And as we all know, unfortunately, sometimes during cycles, we get caught up. And that this is a unique opportunity where you now have Kevin that's going to run it as CEO. You have Jeremy Wyeth, who's our current CEO, but is a 35-year mine builder. He was the go-to guy for De Beers, Anglo American. He was the guy they would send to build mines ahead of schedule under budget. He's going to go into that COO role. He's going to be responsible for the project portfolio. Now you're going to have someone that can go out, that can raise money, that can talk, that knows debt structures, that knows mid-tiers. And you have the person that can build all those mines, building the team out while we're doing exploration. So you gain some very experienced people out of this. And you gain not only the project. So myself, I'll be going to and as a director, and I'll be helping very actively in the background whenever Kevin and them need help. I'll be there. Was very integral in putting all this together, which is obviously back to I do what I say I'm going to do. But I'm really happy that you have a strong, experienced team that's going to build this into the mid-tier that we have already started building.
Yeah. Okay. I love that. That's Kevin Bullock from Signal, who's joining as the CEO. So you're adding to that bench and deepening the bench with somebody who has a lot of experience with producers, which is what you want in your situation. Okay. So getting back to Goliath, concurrently, Morgan, what can we expect in terms of work programs? You're putting a bit of cash in the till right now. You mentioned 11.5 million, probably. That's what you're raising right now. A big chunk of that's coming from existing shareholders. I think you said 2/3 coming from existing major shareholders. Another million just from the executive team itself. So lots of support. What can we expect to see from news flow standpoint from the original Nexgold project, Goliath, in Northern Ontario?
So we're running a drill program right now, and that's going to have some results here, I'd imagine, in the near future. So we're clumping all the drill results from Interlakes into one batch. We're waiting on that. We're waiting on results. You're going to see some news flow here very shortly from the Goliath drill program, from Goliath itself. We always like to say that it's open along strike and at depth, and that's something we're going to start proving here shortly. Again, we like to look for those Red Lake style deposits, not saying Red Lake, but those are nice deep deposits. We have 2 surface deposits, and the undergrounds have not been tested to depth yet. So there are possible honeypot zones. There are possible depth potential in each one of these projects, and that's something we're going to start showing.
Okay. And so near term, we're putting a bit of cash in the till. What shareholders can expect to see from a news flow standpoint is continued drilling at the Northern Ontario Goliath project, expanding that resource as results come in, hopefully. And then now with the addition of Goldboro, once this transaction is fully closed, big program to work right there, including permits, local agreements, et cetera, moving. Is there a time? Is it too premature to ask about a timeline, Morgan, when it comes to let's just say first pour? I mean, that's a bit conceptual at this point, maybe, but what's your take?
Look, we want to be construction decision in Q3, which means 18 to 22 months after that, you're pouring. So in the mining space, if you're going to say you're going to pour gold the next 3 years, that's a pretty hefty task. We all know that, unless you pick up something that's already producing or you bring it back online. In this case, we have 2 of the most near-term buildable greenfield mines in Canada, outside of, I'd say, a Cisco development, which is, Sean Rusin's very nice project there that they've been successful with. So we're in a very good position. A lot of the mid-tiers are missing their pipeline now. They're all looking for what's next. And Everyone always wants the 250 or 500,000 ounce per year producer, but would you not take something low risk? Would you not take something at 100 to 200,000 ounces a year that won't burn the treasury? That kind of stuff. So you have a very unique standpoint. We also will have news flow out of our feasibility study. We'll have news flow out of the Goliath project as well. So you're going to have a concurrent news flow over the next 12 months that should be a significant amount every month. We'll put it that way.
Yeah, no, that's good. So we're looking at a construction decision Q3 2025. And that's effectively how Nexgold plans on filling the gap right now that exists with current mid-tier producers. And okay, my last question for you, Morgan, is, are you still on the hunt, or are you going to get focused now on these? Not to say you're not focused, but are you going to exclusively focus on these two assets at this point, or are you still looking for expansion opportunities inside of that same framework that we discussed earlier?
It's interesting. That is a good question. To get assets of this quality and this stage of permitting and this size are very difficult. Like when you put them all together in one company like this. So what we're looking for now is we have a pipeline for the next 5 years, 6 years. The only thing we would probably consider right now would be a producer. It would be the only thing that would make sense. But we want to make sure we are communicating what we're doing. We are going to build one and then we're going to replicate it again. And in there, if we pick up a producer, if we get picked up by a producer, you gotta think. I mean, Cisco Mining just got bought out, half their position by Goldfields for $2+ billion and didn't have a permit, right? We are the next two permitted mines in Canada, out of the Cisco group, outside of it. So
I love that, Morgan. Look, I appreciate you coming back on today. As I was saying offline, it's always a pleasure when you sit down with an entrepreneur and they tell you their grand plans, but then you get to have them join you again in the near future, and they're actually executing on those and moving the puck down the ice. And it's a rarity in this business. As you know, there's a lot of smoke and mirrors, a lot of blustering, right? A lot of promises, a lot of big conceptual ideas, and a small number of companies that are actually building real assets and real businesses. And congratulations on this transaction. It's huge news and very material news for Nexgold. And I'm sure you're working very hard behind the scenes on this. So hats off, and I look forward to the next time you and I can chat.
Yeah, thanks. I appreciate that, Jay. Like I said, it's so important to do what you say you're going to do. That's how you build trust with your shareholders and trust with an investor base and trust with your team.